So we are coming up on the U.S. Equity Open. It's about 2 minutes till, and we're about as far away from a potential trend as you can get, at least at first glance here. So again, remember, always context. We need to see what's been going on in the market. And in this case, we are in the middle of a range. We've come down to some prior lows and started lifting up, but you can really see the sideways action here, right? So we sort of had a range inside of an overall range, and this is a good example of how to start thinking in terms of what's going to qualify as a swing. So obviously, being inside of a range makes it more difficult. We're not, just in some big uptrend where you can easily grab a swing. So we need to set some boundaries for what makes sense as to, for example, if the market holds right now and starts trading lower, can we take a short off of the CWAP, if it's inside this range? And in order to do that, we're going to have to break down the chart a little bit. So I want to start, as we come into the open here, with the major boundaries of the swing. And I'm just going to use the decision point for that. I'll grab the top. I'm going to get this transition. Now I can already tell just based on how far apart the two clusters are that this is going to be a difficult distribution. And it is. See, there's two distributions here. There's the upper part where there's more volume, and then the lower part where there's less. And it looks like we've traded through the lower one, but we haven't quite traded up to the upper one. So I'll just use a line tool, get that on there. And that'll give me a reference point of when we start, if we start trading up, are we trading above the bulk of volume? And obviously we can use the edge as a value as well. It's a little more difficult with a double distribution because the edge of value down here wouldn't make much sense. So we'd have to sort of choose something around the VWAP here that represents this distribution coming together. So that's for the top side. So that would make it very hard right now to get long. In fact, why don't we just get a little profile on here and see what's going on from this little low. Yeah, so it would be very hard to get into a long right now, trying to trade higher, simply because we're really inside of a range and we're not very far from the edge of it. So we'll look at that and see how things develop. Let's look at the bottom side of this as well. We've got another transition here where we trade down and then back up, and that's giving us the other edge of the range. Now the reason it's important for us to have the edge of the range is that that's the only way we're going to have sort of a point in terms of price to judge whether or not we've broken out of it. Now within the range we have a smaller range, and that was held by a high here, which then held here. You can see it technically penetrated the cluster of trade, but most of the volume stayed below it. So I can look at the actual cluster of trade here and say, yeah, we really didn't trade. We might have traded in price above, but not a substantial amount of volume. Most of the volume was below it. So that held, and then we traded back down to the other side, and then here we've broken up and out of it, and now we're coming back and retesting that. So just think of it in terms of, I'm not going to leave this one on here because I don't want to have a ton of lines on the chart, but you can see how we're retesting that right now. So the ideal thing would be to have something like this hold and continue up, challenge the high, and be able to trade through it. But don't know that that's going to happen. On the low side, we have volume that held here. It was retested here and retested here. So we could do the same thing and come up with something somewhere around here. So basically what we've got is a situation where, so now maybe let's look at it from the high. What we've got is a situation where we really can't get into a swing-based trade. Remember, we're using the swing profile here, so that's why I'm calling it a swing-based trade, until we establish a swing. That swing also has to provide us with a risk-to-reward opportunity that makes sense, and we always want to look out in front of us to make sure that we don't have what I like to call a roadblock, something right in front of us that would potentially stop the trade, right? So an example of that would be if we traded down to here, started printing volume on the other side of it, we put the CWAP and VWAP on here, and it gives us a short opportunity if we, let's say, pull back up into 96. So we trade down, pull back up. And the question is our 2-to-1 risk to reward target going to be reachable, or is it likely that in other words, if it, let's say the target's at 93 down here, and we've got to trade through what we already know to be a low transition, that's not going to set us up very well, right? So we really have to break down below here before we're going to be looking at a downtrend, unless there's a perfect trade here that gives us a good risk to reward opportunity. Same would be true on the top side. So if this holds and starts turning around and challenging the high, then the only thing that I can do is wait for this upper part to be broken, unless there is a really small risk to reward opportunity that allows me to capture, a really small stop that allows me to capture a very small risk to reward. So that's where I'm seeing things right now. I'll just continue to move the profile around, looking for highs and lows, but I don't see any major opportunity right now because it's, effectively we have to trade through this high, or this low and this low cleanly with volume on the other side of it before we're going to reestablish any sort of a swing. All right, so we're starting to challenge the high, and this is the type of opportunity that we're looking for. So what we need to do is figure out first, I guess, where we want to mark our profile from. If we come back here, you can see that we've already traded up and back through the volume weighted average price, and we've been trading significant volume on the other side of it. If we come over to this point, we've done the same thing. We traded up and we've crashed back into it. Now, we didn't significantly trade over this, but you can see that there's a cluster of trade that's more than a couple of ticks through the volume weighted average price. So we didn't hold any of this volume. This is actually a retest coming off of this transition. So I'm going to move this over and see where things fall. All right, and see now you can see that we've got the CWAP above the VWAP, and we're starting to advance. So let's see if we can get this taken out. Remember, just penetrating it like this is not enough. We really need to see volume come in on the other side of this. So we need the volume cluster to shift up. We need a new period up here with a new volume cluster. We really want to get above this whole range of volume, not just hold right in the edge of it. And I think that's the biggest problem that most people have, is that they get very confused about the high versus the point of control or whatever it is. I try not to think in terms of price. Yeah, 1, 2 ticks, whatever it may be. I'm more interested in where is the volume cluster in relationship to the volume cluster, right? So we have this big area of volume over here, and we've got the same thing going on here. So even right now, we're really not trading volume above it. We're creating a new period, and it by default has a cluster, but now you start to see that we're starting to really get some volume trading higher. And I think that's the point in time where we can say, yeah, okay, we've actually printed some volume on the opposite side of it. We can look at this as a long opportunity. So our objective here is to get this turning into a swing. We want it to come back down and pick us up at the cluster weighted average price. We'll use the volume weighted average price as our stop. So we're just going to try and get a tick in front of these. And it looks like this is kind of holding right here too. So I think I'd like to see a little bit more come out of this. See, note we have volume up above the breakout here, but it's all sellers trying to drive down. Now the buyers are starting to come back through. So it's not about like how many ticks, was it 1 tick past a line or was it 2 ticks past a line? It's really about being able to witness the concept that there's buyers trying to buy up the other side of it. And so if all it is a cluster up there that's holding and we're driving back down, that tells me that it's sellers holding the line, not buyers buying through. And look, inevitably you're going to miss some trades because of stuff like this, where you just can't justify it because you're looking at it and saying, well, price is moving the wrong way, and then all of a sudden it takes off and goes the way you want it to. And you might very well miss a trade because of it. It's okay. It's better to have all the things line up and really make sense than to try and force something that doesn't make any sense at all. All right, so now we're starting to break away from the volume. Let's go ahead and get an order in here.
Order pending.
So I'm going to place an order here. I want to get a tick in front of the CWAP, the little blue dash line. And once the order is, if the order is filled, then I'll worry about my stop. For right now, I'm just using a very basic ATM strategy. But this is what I've got to be focused on. I've got to keep moving my order, because as the market breaks away, new clusters are going to carry that CWAP and VWAP up. So I've got to be diligently moving this, right? Obviously, we've got an AlgoX add-on for this that does a lot of that work, well, not a lot of it, damn near all of that work for you, as well as really helping you with the risk sizing. But there's no point in going there until you understand what you're doing. Right? There's particularly in trading, there's people who they have to own everything. Oh, I need that, I need that, I need that, and they get overwhelmed, and they don't realize that if they don't understand the sort of the fundamental footsteps of how things come together and how we use things, then it really doesn't make much sense to jump in, all the way with both feet and try and particularly build something that you're trying to build an income off of. You really need to start with just the baby steps here. Now let me tell you why I really like this trade. If this comes down, think about it. We have a point of resistance, a transition point here that we're now trading through. Buyers are initiating trade through that prior transition. So the resistance becomes support from the idea that the amount of buying effort that comes into this, the buyers that force the market through that point. So people always talk about support becomes resistance or resistance becomes support, but very few people understand that it's really the volume that creates that or makes it fail. So a lot of times you'll be expecting that there is a level of support or resistance, but the volume doesn't match up with it. And so that's when it gets either a little bit higher or a little bit lower. So I really like this just because visibly we're talking about trading through the top of a range, coming back in and retesting the edge of that range. And that's where all my numbers line up right now. So I've got, gosh, look at how tight this is. You can see it moving up a little bit more. Bring that up one more. I love it when I see this. It's a very small stop, right? So bring that one. No, it's moving very, very rapidly here. I like it when I've got a stop that's really just a couple of ticks. A tiny amount of risk on the table, very easy to get a 2-to-1 or a 3-to-1 out of it. And if it fails, it fails, right? It's not the end of the world. It's only a few ticks. So generally when I'm looking for swing-based trades, I'm really looking to take advantage of that small initial risk, that first placement, what we call our size-off value. So right now I'm sizing off of the volume-weighted average price, and having that down here, a couple of ticks behind it is just perfect. I'm going to lift that up again, starting to spread just a little bit, but it's also starting to kind of run away on us, and that's to be expected. Your risk is going to increase as the market starts running away. And we'll just uptick again. You can see now we've got quite a different gap on the risk to reward versus where we were. Now, I was talking about how much I like the trade because the entry was up against the edge, and now think about it this way. Now our stop is right there, right? So this is the kind of trade that it's imperative that we get it filled while the VWAP is still in this same range. I'm going to shrink this up just a little bit so we don't lose it. In other words, if the VWAP is supposed to be our backstop, it's just a mathematical calculation, right? It's always going to be better if you can look at something and say, hey, not only is it the mathematical calculation, but damn, look at it. It's exactly where it needs to be. So having a stop behind this makes good sense. If this starts going up higher and higher and higher, it's going to be very hard to justify it from a risk perspective, because we would expect that the market comes down and retests the edge of the range. Technically, I guess it already did, so hopefully we can just get picked up here. But you really want the pieces to fall together. And the more things that you can visually process, and I think that's what a lot of people don't get about trading. They're so excited about having an automated something, finding something for you, or having these fixed settings to do everything with. And to me, the biggest problem with that is that your brain once it's trained, can visually process things a lot easier than an algorithm can.
Order filled.
All right, so there's our fill. Let's go ahead and get our stop up behind the volume weighted average price. And so now we can see that we've got a little stop here. And what I always want to do as soon as I've got everything in there is go ahead and get my risk to reward stuff set up. So I'm going to use my entry and my stop, and there is my first target. All right, so that's the 2 to 1 right there. So I'm going to bring this down. Let me just make sure I've got that at 2 to 1. Yep. I'm going to bring this one down to here. Then I'm going to go ahead and hit 3 to 1. I'm going to bring this one down to here. And then I've got one more up there, and I'm going to change this to 5 to 1. And now I've got my 2, 3, and 5 to 1 targets all set up. So I can get that off of there. I can always put it back if I need it. But anyway, I think your brain can visually, I think your eyes and brain can visually process certain things faster than an algorithm could, simply from the complexity of what it would take, right? I'm sure that there are people who can program just about anything. In fact, I know there are, because I'm constantly blown away with technology. But to me, to be able to look at something and say, all right, well, this makes sense. I'm in the right place here. You know, and in fact, we're getting to the point where if I got stopped out to the tick and the trade then worked out, I almost couldn't complain about it, right? Because visually I can see that this is where the market should hold if we end up penetrating that far. I'm hoping that doesn't happen, because we've already had one move back down there. But I think that if you spend the time training your eyes for things to look at in the market, particularly when you've got volume clusters all over the chart, I think it becomes much easier for you to process it than to have the computer trying to process that for you. And it's sort of like years ago I was involved with a firm that did facial recognition software. And one of the big problems that we had was that a lot of times anything that was round or spherical in the camera view would get tracked as a face. And obviously it's much more advanced now. This was 18 plus years ago. But I mean, to the point where you could effectively have the computer tracking a beach ball, thinking it was somebody's head. You can take one look at that and say, that's not a head, that's a beach ball. But the amount of programming that went into those early days of facial recognition, trying to balance something like that, was incredibly difficult. So maybe not the best analogy, but I would say that's sort of the problem that I have with trying to automate everything. There's just certain things I can look at and see and say, well, you know, I think I've got a better grip on this than trying to make sure that I'm not having a stop, you know, within plus or minus 1 tick of something that I then have to go back and define that anyways. So we'll see if this will come together and lift up. As it stands, we've got about a 5 tick risk on the trade, so very, very minimal, and looking for that first push into 10 ticks. Okay, we've traded back to the VWAP. We're just a tick off of the stop here.
Stop filled.
Okay, and the stop gets picked up. And now I think really more than anything, the big question is, does it still hold here? Because we've really put a lot of weight on the idea that this could very well just trade back to this level. And I think this is a good lesson from the standpoint that those are the types of decisions that you've got to be able to make. And you've got to sort of accept them, right? I mean, I accept this as whatever the outcome is, this was the exact type of trade that I'm looking for every day. How do I know it's a swing? Well, we broke out of the top of the range. How do I know that we broke out of the top of the range? I watched the volume develop here. I watched the fight go on between the buyer and the seller. And I watched the buyer initiate enough trade to break out of this, which then produces what we would call a swing, or a leg in a swing. So that's my opportunity. Right? In other circumstances, we might look at it a little differently. You know, maybe we should have been looking back here because we had the test of the transition low here we lift back up, we come back, we retest it, we hold. So let me give you an example here. I'll just put a little decision point here. And you can see where we held. In the first lesson, that's one of the things I was talking about, is the ability to see lows or highs that come in that then lift up and retest into them and test a little bit higher. That stair stepping up is generally a good indication of a strong low. Oops, sometimes I do that. You don't want to hit the delete key. You want to, and so we'll see if this holds and lifts back up. But ideally, I've got all the pieces of the puzzle here for a good trade. And trades are just probabilities. It's not like anybody's going to give you a setup or a system or a whatever that's going to work 100% of the time. So you need to be able to look at each trade and say, well, did I do everything right? Just because I got stopped out, does that mean that I'm crazy and this isn't going to work? Or should I maybe have had my stop a little bit deeper? Well, I didn't make any adjustment to my stop because the volume weighted average price and the area where I thought we should hold were in line. And so if I opened it up one more tick, would it have helped me? No, I still would have been stopped out, and I just would have had a bigger risk. I would have had 6 ticks instead of 5 or 7 or 8 or whatever it is. So the best thing that you can do is focus on the reasons that you're getting into a trade. Check yourself for things that you might have missed, and ask yourself, would I take this trade again tomorrow? And for me, the simple answer is yes. I would absolutely take this trade again. I don't see any reason that I wouldn't. It's exactly the type of trade I'm looking for. It's a very clear swing break out, and unfortunately, it's just come deep back into it, and much deeper than I could have. I couldn't have saved it by manipulating my stop in any sort of logical way. So we'll mark this one down as a loss and move on to the next lesson.